All right, everyone. Good morning. Today we are going to be going over keeping your friends close, but your loan officers closer. And we've got the CEO, the COO, Brian Crawley, the man of the hour, and he's going to be sharing with us first off how he got on GQ magazine. Secondly,
That's the anti-GQ, but go ahead.
secondly, we're going to be going over how to utilize your LOs to the maximum, marketing, but also while staying RESPA compliant. This is a big one to keep in mind. So with that, Brian with First Rate Home Loans is going to be giving us quite a bit of insight on best practices to utilize your LOs. These are all the items we'll be going over today. So there's a lot we can learn. Real quick, we're gonna go over just a few of these terms. First of all, I've seen a lot of deceitful practices with some lenders or builders, and that goes around the APR versus APY. Brian, give us a breakdown on what that is.
I'm glad you mentioned builders because that is the most difficult thing. So let me use an example to show, just so it internalizes what this means. So a builder might have an advertisement that says, "Hey everybody, we can get you 4.5% interest on this house." And
Ooh.
depending on when you watch this recording, this is not realistic today. maybe in a year or two. But
Yeah, current rates are like at 7, 6.5,
yeah.
right?
So
Okay.
everybody's like 4.5, I can afford that house instead of this little shack on the underneath the freeway, and everybody's like, okay. So they go in and they get their loan, and all of a sudden they're like, well, wait a second, why, what's going on here? Why is what's this huge cost coming to closing? And that's where the APR comes in. So there's the interest rate of the loan, but then there's the APR, which is the total cost of the loan. So that's going to include buy down. So that's what builders do. They like to play games to make it look like it's better than it is. So they'll say, oh, all it takes is $25,000 cash up front, and you get a 4.5% rate, just like we advertised. Well, turns out most people don't want to pay $25,000. So that's where the APR is. APY is annual percentage yield. That's interest you get. APR is the total cost of your loan, and that's important when you're advising your buyers. Say, hey, when you get your disclosure from the lending company, look at the APR, not the interest rate, because that will tell the true story. And all loan companies need to abide by the same rules with the APR. Interest rate you can play with. APR, that's where you can compare apples to apples with different loans.
And I've seen this in practice too. I've had a client and they're like, oh, I can get a better rate with the builder. I'm like, well, let's apples to apples. And you got with an LO, I mean, broke it all down. They would actually save money going with a different lender than the preferred lender because of all those added on fees and costs. And so that's very important, APY versus APR. Some other things that are jargon in the lending industry, like an LE. What is the LE and time frame for that?
So loan estimate, and really it should be pretty quick. And that's where you're going to get a breakdown of what the loan means, just kind of a bird's eye view. I usually tell people if you can get an LE from multiple lenders. I mean, obviously as a lender, I want them to only look at me, and there's good reason for that. I think we have the best rates out of 90% of the time, 95%. But the thing is, if you don't have an LE, there's no way to know which lender is beating the other one, right?
Right. So we'll go over one more definition. That's lock period. So this is what a lot of people don't understand is what does the lock period mean, and does that truly lock you in?
Does that truly lock you in? This is a trick question. So, well, let's talk about lock extensions. Is that okay? Because that's really what this is
Start right
leading
there. Yeah.
to. So if we get in and lock your loan, and you really got to watch your loan officer with this, like to the point of babysitting. If we get in and lock your loan and you ask for extensions, it's kind of, as a realtor, I always say it's kind of your job to do everyone's job. I hate to say that, but that's kind of what it comes down to.
Right.
But you need to tell your loan officer, okay, we're getting a 20-day extension. Does the lock extend that long, or do we need to extend the lock? Because if rates change dramatically, they might not even qualify for that home anymore if the lock doesn't get extended. So when we lock a rate, we can do 20-day lock, 30-day lock, 60, and that will cost the borrower more money if they want it longer. but you
And
need to make sure.
that's exactly what we're trying to get at, is that there is deadlines and timeframes. And so as the agents understand that, they can better negotiate and understand, well, just like in vice versa, like when the LOs don't know that it's just so easy to get an extension on the real estate contract, agents don't know that the LOs just can't extend the lock just because, and sometimes the interest rates jump dramatically and it can have a major effect. So so a few things real quick for the agents. Here we have pledge and promote the interest of the client. We're going over just a few of the NAR code of ethics. As a agent, you are looking for your client's best interest. Now, it's great to have partnerships with LOs and knowing how each other works, making sure that there's timeliness in delivery of documents and deadlines. However, you need to look out for your client's best interest. And just going with one person, you shouldn't just say, you need to go with this one person. You should say, hey, you can choose whomever you want. And there's a few options, but here's a few that I know and trust really well. They'll give you a great deal. And I know that it'll be a smooth transaction. So that's what you can do, but you cannot steer your clients and saying, hey, you need to use this person. You can get into trouble and it will come back to bite you. They need to have some options and understanding that they are not required to go with one direction.
Can I add a word of caution to that as well?
Yeah, go ahead.
So the biggest mistake, because in real estate training it says make sure you give 3 options, and agents think that that's like the code of ethics or something like that. Really, it's a best practices, right? Like this will protect you legally. But what will also put you in danger legally is if you give them 1 good option and 2 really, really bad ones that you've never used, just to say, oh, I gave you 3. So really, if you don't know 3 good loan officers, give them the one you know will do a really good job, and then give them 2 others, but be careful. And I'm always like, be careful what you put into writing. But I like to tell people, I've used this one before, they did a good job for me last time. Here's their number, and here's 2 others. And maybe in a phone call, not a text, just say, I have not used these, but I've heard good things. But you don't want to just say these are all equal, because what's really dangerous and what you're really trying to do, taking care of your client, is making sure their loan goes through. So if all you care about is protecting yourself, you could put them at risk if you're giving them 3 not great options. So make sure you do try to get them to know which one has done a good job. If there is one that you're like, they really should choose this, you can express that to them. You just have to be really careful how you do it, especially in writing.
And if they're needing some options, they can reach out to you, Brian, and get a few suggestions with the LOs and first rate, right?
Yep. Yeah, you can give 3 options within the same company. That's totally fine.
Okay. So now going back to the builders. So builders cannot require you to use their lender, right?
They cannot, but they will try really hard.
I actually did a training yesterday, and I was talking to a few of the agents, and they said, one of them specifically said, well, they said if I didn't use their build or their preferred lender, then I wouldn't get the better interest rate. And we talked about the same thing. And I said, well, did you run the APR? She said, I don't know what the difference is on that. So I just told my buyers to go with it. And so it's funny how that turns out. And I explained to her what happened with me, and she's like, oh my gosh, I had no idea. And so now they will try and steer you. They legally cannot force you, but what they can do is they can require you to get qualified through the preferred lender. And so that is okay, but they cannot say you have to use that preferred lender. If there's any questions with that, you should reach out to your broker if they're actually trying to force you, or if there's something going that seems off, you can report that to the state and the division, which you should, if you're seeing any bad practices being done there. But yeah, true pricing, if you want to just kind of re-hit that point again.
True pricing, you said? Sorry.
Yeah, true pricing.
Yeah, and as I lead up into that, feel free to call me as well. Even if you're not using one of our loan officers, I have no problem calling a builder with you and just educating them. And sometimes you just need to remind them what the rules are. And oh crap, these people actually know the rules. All right, we'll let you use your lender. Yeah. Pretend we didn't do that. But, so true pricing, going back into it, I look at it as Kohl's. If you've ever shopped at Kohl's, you'll go in and like everything's 90% off. So they'll mark up the price a ton and then say, look, it's 90% off. That's games, right? You're playing games.
That's like when you go to Walmart for like the Black Friday and then they have a sticker, like they have a card top the other card, and it's the exact same price.
Yeah, and you look under it, you're like, oh, it's always this price, but people are like stuffing it in their cart.
Yeah.
That's how builder loans are. It's like they will play games with every single number they can, and that goes back to the LE like we talked about. Get the LE, the loan estimate, actually see what the true costs are, what are the buy downs, what's the money going towards. They'll be like, oh, we'll throw in a new front yard for you. And just don't let your clients fall for it. I'm not gonna be dishonest here. You have to, sometimes it can't be beat. Like builders, they have this relationship. My personal opinion, it's often unethical and they're going to get dinged for it eventually.
Yeah.
But sometimes there's, the builder owns the lender and the money's going back and forth and there's nothing we could do to compete with them. But you need to allow your clients to try to compete with the builder's lender, because I've seen way too many that are way bad. Like they're seriously, when it's all said and done, paying $10,000, $15,000 more than they would with a broker like us. But some builders out there, they just make an unbelievable deal. So I don't want to disparage and say all the builder deals are scams, but you do need to know the true cost of what your clients are getting into and compare it with something else.
Right. And you bring up a great point, being a broker and the differences. So there's banks, there's retail, and there's brokers. Basically, I'll let you give some insight, but basically the way I look at this is bank has pretty much like one type of product. And if you can't fit in their product, they're like, sorry, you don't qualify. But they don't say, hey, you might want to talk to a broker. And then the retail is kind of like a mixture between a broker and the bank, where they have a few products, but they're still usually more expensive because they're offering some bells and whistles to their agents, nicer offices. So you don't usually get the best price point. And then the brokers are shopping like various 30 plus 40 different types of companies to get the best deal. So that's my Barney, broken down Barney style, explanation, but give some feedback as to how you would present that to the agents.
First, I need to know, is that Barney Fife or who's broken down Barney?
Barney style. That's Barney, the purple dinosaur.
Oh, okay.
Elementary.
I'm back in like the 50s with Barney Fife. I don't know about this purple dinosaur. Oh yes, Barney. Everybody knows Barney. I can do a great impression, but I won't.
Yeah, let's not do that. You'll lose credibility real fast.
Yes, I will. So I'll put this in real estate terms, because this is how I learned it and helped me understand it. Is a bank is like a builder's agent, right? This is our product. This is what we can do. And it's like, well, can you build me a house over there? Or can I do this? Nope, this is it. This is our little box. If your loan, in this case, fits in this box, we can do it for you. Then retail is kind of like somebody who only does listings. Like I farm this area. I only do listings in Highland, Utah. That's all I do. I can show you all sorts of different kinds of houses. I can show you new builds, this and that, but I only list houses. I don't work with buyers, and I don't leave Highland, Utah. That's kind of like a retail. They've got more options than banks, but they are still pretty limited. Their box is bigger. Maybe it's a truck bed, not a box, but they can't do everything. With brokers, I kind of say it's like the ocean, but in realtor terms, it's like most of realtors. It's like, I'll sell a home over there. I'll do a buyer here. Mobile home, if I need money and I have a buyer for it, I'll do $1 million listing. That's how we are as brokers. And brokering there's pros and cons, so it's good to know. With a retail shop and a bank, you're generally, if they say it's going to happen, it's probably going to happen there, because it is the box, right? They've got like 3 or 4 options, and if yours doesn't fit, they'll say no. If it does fit, they'll say yes. So in some ways it can be a little safer, unless you have a broker you trust. So you just need to make sure your broker knows what's going on, because there's so much that can go wrong when you're working with 40 plus options. There's no way that broker has worked with each of those 40 in the last month, and things constantly change. So a broker partner, in my opinion, is an amazing partner if you have a good one. So that's the big difference. Just tons of diverse options, and really we can work with hundreds of different places, because all it takes is one piece of paper and you can work with a new one. We did a loan on a soccer field, airplane hangar. Like, it's insane the type of stuff brokers can do.
I'm gonna give you a call when I find the right place for a basketball court, because that's what I need indoor.
Yeah.
It's too cold. All right, so that takes us to types of loans. Agents, you're probably familiar with the FHA, the VA, USDA, conventional. Those are your standard loans. But then we hear this word being thrown around, QM and non-QM. Break that down for us, Brian. What does that mean?
Yeah, so QM mortgage, those are going to be easier. That's really what you need to know as a realtor. If your lender says we're going to have to go non-QM on this one, make sure you dig in a little deeper and say, okay, what are we looking like on timelines? What should I tell my client? And don't accept the first answer from your loan officer. Just be like, no, really, like, what are we getting into here? Because non-QM stands for non-qualified, and that means that they didn't qualify, or for whatever reason they didn't want to go with the easy, conventional, normal, standard loans, right? You got them listed right here. They're like, okay, bank statements, interest only, stuff like that, that's just unique. A lot of independent contractor, or not independent contractors, a lot of business owners, self-employed, will have to go non-QM, and it can, it can change things a lot. The interest rates are going to be a lot different. And you can see right here, you put together a great list. The broad range of alternate terms and qualifications. That's if I can emphasize the word broad, non-QM loans can. That's where if you're going to a bank or a normal lender, you're going to want to not take no for an answer and come talk to a broker about non-QM loans, because that's really the biggest thing for you, is you can qualify way more buyers that would have been like, oh, never mind, we'll go rent.
Right. So an example of this for the agents is if you've got a client who is self-employed, right? And they itemized so many things so they pay less taxes, right? So it looks like they made hardly anything. Their tax returns are going to show that they made very little. So they may have to go the non-QM route to find a loan that would fit their portfolio, correct? That'd be a great example, right?
Yes. Yep.
Okay.
And way too many buyers will stop shopping or not even talk to a realtor because their bank says you can't qualify. So really, you need to educate. This will get you more deals. Do a video and say, hey, if you've been turned down by a bank, talk to my lender. We can try to get you.
I love that. Okay, so now this gets down to investment properties versus primary residence or homes. So agents, there is a difference in the processing for loans, whether it's an investment or it's a primary residence. There's higher interest rates on investments, higher down payment on investments, and higher credit scores. And so reserves are going to be larger for investment properties. And that's because largely it's more risky and the default is higher. So I like to give an example for you agents. Put yourself in a situation, you bought a home, this is your primary residence, and something happens with the market and it just tanks. And you are underwater, your payment's slightly higher than it would be on a rental, but this is your home. Would you still pay that extra each month than what it would be like a normal rent? Most people would. Now, let's flip that around and you have an investment property. And in that investment property, now the market tanks, the rentals tank as well. So you're paying more for your mortgage than you are for your rents, and you're underwater in the value in the home. As an investor, are you going to want to keep losing money each month? Probably not. So default is higher. So this is why they have this set aside. Now that's going to take us into mortgage and contract fraud. And so Utah, it's not number one right now, but it has been in past years for mortgage fraud. We're number one in a lot of things, but unfortunately, mortgage fraud is one of them in some off years. So what does this mean? It's lying, or not just lying, but deceiving the lender and institution to believe that you are getting one type of loan when you're really not. And so the most common example of this, and we've seen plenty of this, is, well, yes, it's my primary residence, but kinda. And I'll send my mail to that residence, but what marks you as a prime residence is if you're there living there as a primary residence more than 50% of the time. So if you are, and here's the thing, agents, you can actually get in trouble just as much as your clients. if you are aware, and here's the other thing too, is usually in most cases, there is jail time involved with mortgage fraud in most cases. So if your client's saying, well, yeah, here's what I'm planning to do, you need to warn them and advise them that if they are being deceitful and they are not planning to move in, that's considered mortgage fraud, and it's a big deal. You need to advise your clients. Feel free to pitch in any your 2 cents too. I just want to nail that one down.
Yeah, it's this is the thing where they always say, is your commission worth your license? You know, because this is a bigger deal. Is it worth your license and you going to jail, or your client going to jail, or $1 million fine? You know what? Whatever they're going to throw at you. So here's the big deal with it. I've seen this way too many times, and trust me, I know. If you're an agent, and I used to be an agent, there can be some scarcity, and you're like, man, I really need to pay my mortgage. I need to get this deal done. But how much do you care about your clients? Like, I've seen agents who will be like, well, you know, do what you want. I can't know about it though. You know, I'm like, okay, so yeah, you want your commission, and you are okay with your client going to jail.
Yeah.
that's kind of not, that's not okay, right?
So fiduciary responsibilities, do you remember what those are?
Yeah, right.
Looking out for your client's best interest, right? You know?
Yeah, and there's
competency. Yeah.
Talk to a loan officer, and actually here's an idea for vetting your loan officer a little bit. Ask your loan officer to educate you on mortgage fraud.
Yes.
And if they really go into depth and give you good education, always reach, you know, Google it, make sure it makes sense. But that will tell you if your mortgage officer is ethical and if they actually know what they're doing too.
So this is key, Brian. So again, yesterday in my class, I had this same lady who had that issue with the builder, had an issue with her own purchase with a property. She said, well, now that you're sharing this, tell me, was this mortgage fraud? And I'm like, oh boy, here we go. and she's like, so I bought a primary residence, like in another state.
No, she's confessing to the whole class.
Yeah, I'm just like, oh. So, and she's like, well, I bought another state, but the LO said, well, is your family gonna be living in it? Yeah, my family will be living in the home. I'm like, are they the ones who bought it? Are they on title? Like, what are all these scenarios? And she broke down. It's like, no, it's just me, but I'm letting them, you know, live in it. I'm like, so this is a second home, essentially, not a primary residence. And she's like, so did I commit mortgage fraud? I was like, technically, and so did the LO. And her face is just like flushed.
So tell her to, if you talk to her again, I think the statute of limitations is 10 years.
Yeah.
Unless you're in Florida, and then you have to live there for 10 years. Little known fact, you'd have to move back to Florida and live there until the statute runs out.
I don't think that'd be that bad, Florida. It's warm. I like it.
Whatever.
Yeah. So, okay, but you know, all jokes aside, guys, this is a serious thing. And here's the thing. The NAR, the National Association of Realtors, the division will give you slaps, maybe a small fine, have you do education. The feds won't. They will go after you, and they will find a way to prosecute you. Do not play games here. This is not worth it for you nor for your clients. Okay, enough of the scary aspects. So, oh, never mind. We're jumping to jumbo loans. So, so agents, this is like if you have a higher price point, the jumbo loans is $766, $500. Most of Utah, depending if you're like Park City, it's a higher price point, and depends on like 1 unit versus 2 units. But Brian, kind of give us a quick 30-second breakdown on jumbo loans.
Yeah, it's like you said, if it just doesn't match the maximum amounts for the FHA and everything else in the area. They change all the time, so just Google it. It changes by county to county. Like Park City, you can't even buy a house for the maximum that you could get for in another place. So that's where a jumbo loan comes in. Just read the screen. That's all accurate. And as far as the maximum goes, once you hit 2 to 3 million, most buyers, believe it or not, are using cash. So that doesn't come into play very often.
Yeah. Thank you. You kept it to 30 seconds. That's awesome.
Yeah.
All right. Lending fees. There's a list here. You feel free to read some off. Am I missing any? for the agents to know what they should be considering when there's fees involved in their purchase?
Really, this goes back to the name of the class, keep your loan officer close, because don't try to explain lending fees to your client. It's almost better you don't understand them, if I'm being honest.
Yeah.
Like, say, let's get the loan officer on the phone and let's talk to him, because there's a mountain of fees. Like, they have to pay taxes even if they've already been paid by the seller up to that date, and it will get refunded back to them. And there's so many fees that come out. When I used to be a realtor, I'd tell my clients, when you buy a house, everybody gets a piece. Like, literally, the city will come, the HOA comes and gets in advance, insurance wants advance payment on everything, and it will look nightmarish to them because they're like, why am I paying all this stuff? Am I not paying this monthly? Didn't the seller pay some of these taxes already? It's June. Why am I paying a year's worth of taxes? All this stuff. So really, the loan officer needs to understand how to explain these. Again, if you're vetting your LO, hey, could you provide me with an LE and explain it to me like I'm the client? And ask them questions about each item. If they can't answer it, they probably don't know how to do loans very well, honestly.
Yeah.
But yeah, there's so many, and they're easy to explain, but the borrower will freak out. So just tell them, everybody wants a piece. They're not all accurate. They have to overestimate. That's actually a rule we have. If we underestimate, it can mess up the whole thing. So they have to overestimate. Let's get the loan officer on the line and he'll explain it.
So agents, this is important just to prep your buyers and just let them know, hey, there's a lot of different fees from, inspections, taxes. And so there'll be a lot of itemized things here. And so talking with their LO, they'll be able to give them a rough estimate, but say it's not exact until we get down to that point. So as for down payments, down payments, you can have different sources of down payments. What's not acceptable, and you can break this down, Brian, but is if you haven't had money in the account for a period of time, right? And what is that called?
They like money to season, generally 2 months. I like to tell people 3, because when does a month really start? If you're doing the loan on the 15th, will they go back to the first, so 45 days, or will they go back, 6 or 75 days, whatever that is? So it's kind of it's 2 months to really be like, okay, if it's in there, odds are they're not going to look past 2 months. Yeah. But really, if you're buying a house in the next year, don't keep your money in your mattress. Don't do that anyway. Like, people in California that have money in their mattresses right now lost a lot more than just their house. So don't keep money at home. I don't think it's smart either way, but as far as a mortgage goes, put it in the bank immediately if you're even thinking about getting a mortgage.
Okay. Now, when talking about gift funds, they're generally accepted, but beware of mortgage fraud. Again, when you're dealing with like say a father or a mother-in-law or grandparents, and they're gifting you funds, they have to be gifted. They sign a document that will say, I don't expect repayment of this. But what I've seen some people do is they'll have 2 contracts, one to the lending institution and another between them. What that creates is, what was that thing called again? Mortgage fraud.
Little thing called mortgage fraud.
Now, in Monopoly, I love going to jail because I buy up a bunch of properties and I love going to jail. But in real life Monopoly, that doesn't do you very, very well.
No. And
free room and board, yeah, but
it's another thing that's just, there's so many clients out there. Like, Josh has so many great classes that will teach you how to get an amazing database. If you have a client that's like, well, my parents will give me this money, and if I decide to pay it back, like, is it really anybody's business? Just tell them, like, there's some realtors that might help you with that, and I'm not one of them, know? And
all you got to say is, and here's the thing, that they will respect you. And I've had people say, well, I can do this. I'm saying, but here's the thing. I'm not going to put you ever in that situation. I would never allow my clients to risk going to jail. And so if you really want to take that risk, you would have to do that with another agent, because I will never allow myself to do that to you. And they will be like, okay, that really puts in perspective.
This is super common. Like, I've been a part of so many transactions that I'm like, I don't even want to dig into it, because I'm pretty sure something like this went down, right? Because I'm different. I if I hear about it, I'll nip it in the bud. But 5 months later or something, yeah, I started paying them back. I mean, So anyway, Brian, how did you watch that game yesterday? Like I'm calling my clients and I'm just like, oh my heck. So it can come back to you. Like, who knows? Was there a text that you didn't read all the way and you're like, sure, sounds good.
Mhm.
What if they said, hey, I'm writing up the contract to pay my uncle back for that gift funds, quote unquote, and then they say something else and you're like, sure, sounds good. Like,
Oh,
these things can come back and hit you. So
yeah.
this part of this is anytime there's a gift letter involved, as a realtor and as a loan officer, pound it in. Just be like, this is a gift. No repayment. Promise me in writing. Send me an email right now saying, I promise I'm not going to have to repay this back because I
Right.
need to be protected and I'm trying to protect you.
Yeah. Okay. All right. So down payment, DPAs, down payment assistance. I know that's what you guys call them, DPAs. And these grants. Real quick, how many can you even give an estimate of how many DPA options there are in Utah right now?
I don't know, 5 to 30.
Yeah.
Somewhere in
Essentially,
that range.
but
Because they're
there's a
always running out of money and we have money again. And
yeah.
yeah.
So agents, it's good to be aware that there are programs, but just like Brian said, is like, do they have money? Are they out of money? When do they get more funding? Do they change rules? Do you have to be a first-time home buyer? There's so many pieces. Know that there are programs. Get with your LO who can search those programs and say, hey, what are the down payment assistance programs that my client will approve for? Boom. As for grants, there are some grant programs, especially for like teachers, with veterans. Like the veteran one's super simple. First time home buyer, you're a veteran. All you do is you apply and you get $2,500 right out the gate, and it's not specified to anything. You can use it for whatever you want, and that's amazing. So, one sheet paper application done in less than a week. That is totally worth the funds. I just did it with a client right now. I gave him the link. And he's like, hey, I just did it. It was that easy, $2,500. That's the most money I made ever in such a 15-minute period. So a lot of programs, your LOs will have access to a lot of these. And so you don't need to be the expert, but be aware of what programs may be advantageous to your clients. So earnest money sourcing. So for you as a lender, the lending institutions and different types of loans will also want to see this source coming from where?
Coming from the person getting the loan.
Okay,
Try
same
to
thing.
get fancy with it and get 10 extensions,
So if you're doing your earnest money, agents, you need to advise your clients that this money needs to come from you, or you need to make some sort of letter saying this is a gift fund. Same thing as before. It needs to be seasoned in an account. And wherever that comes from, they will have to check those accounts.
And they'll have to season those accounts. That's the other thing. Your parents can't use mattress money and try to give you gifts.
Exactly.
Like it's all within that seasoning rule.
So advise your clients that it needs to come from their account. If it's coming from someone else, then they have to be willing to share their bank statements. And I had this issue with a client before where the parents didn't want to give their bank account information, which then raised more red flags. And it was just, we found out that there's a lot of weird dealings going back and forth between the kids and the parents. And I was just like, they're trying to be deceptive. Just advise them early on. As for transferring earnest money, guys, personal checks are kind of frowned upon sometimes, but you can do a certified cashier's check too. Those are iffy. At Realty Path, you can just wire it. You can do ACH transfer, and we do that through a few different programs to make it simple. You can actually request it to go to your clients, and then they put their bank information, and it goes directly to our account at Realty Path, and then you get a receipt right off the back. Really helpful. And you can also send to a title company. Secure Title is one of our preferred secure title companies, and they can receive that as well. But coming back to gift monies, again, you can, talking about like realtors, you as a realtor actually can gift some of your commission to your clients, but you're going to have to fill out a document, same thing, like this is gift money. And the lenders usually want to have permission from the broker, the brokerage, to say, yes, we do allow this commission to go to the potential buyer. Why do you need the broker permission? Because the broker is actually the one who gets the commission. It's not the agent. The broker pays the agent. So unless the broker permits this, then it's not a guarantee gift to the buyer. Now, do you need to cut yourself low on the situation? You should get compensated appropriately for your efforts. But I'll give an example. I've done this. One of my clients, they were literally short $2,000 on a credit card payment. They had no family that could gift them funds. We had already negotiated the price down, and the seller's like, look, we can't do any more. We're maxed out. They wanted to help. The other agent had already come down commission on his end to make things happen best we could. And so I said, hey, you know what? I'm going to just gift you $2,000 to pay off your credit card. I wrote it down, got permission from my broker, and boom, it was done. So you can do that stuff. But again, I'm not saying, hey guys, pay me back. We'll do a monthly payment of $100. So there's two things there. One is that would be a dual contract. That'd be mortgage fraud, right? The second thing, I guess maybe that's three things, but they're kind of combined. But the third thing here is not only am I doing that, but I'm getting paid a commission technically from a client, which means that it has to go through your brokerage. So now that didn't happen, I'm just saying, like, if that were to happen, that is, you understand you're breaking multiple things here. So losing your license and going to jail simultaneously. You get free room and board and no longer have to work. So, that's an easy,
There you go.
1-2 punch right there.
You're trying to encourage this now. You're like, you know what? Hey, really quick, let me give some bad advice on earnest money and stuff.
Yes.
So we said that it has to season, right? Let's go back to what I said about the broker world, how it's like the ocean.
Mm-hmm.
Technically, there are lenders that will take, they even call it mattress money in their guidelines.
Mm-hmm.
They're like, we take mattress money.
Okay.
The reason I hesitate to even bring that up is because you have to give your client sound advice. But if it gets down to the point where you're like, crap, this is all we have, this is their dream house, what do? Call a broker.
Okay.
Like, see if there's somebody that will do it. But just know, I've tried to work with those before, and it's tricky as all get out. Like, you do not want earnest money to go hard if you're doing really weird loans like that.
Yes. Okay, closing credits and closing costs. Okay, we touched on this a little bit on some fees and everything else, but agents, closing costs mean different for everybody. Closing costs for your lender, closing costs for title, closing costs for your clients. You have to break it down. So essentially, your lending closing costs, your title closing costs are going to encompass all of that. So what I like to do is I like to talk to both the lender and the title company and say, what are we looking at for this purchase price? What are our essential fees? Now, some of that's going to be HOA fees. Maybe you don't have that information yet. It's mortgage insurance. It's, pest inspection, taxes. But you want to get a rough estimate so that way you, as an agent, can understand how much should I try and negotiate in the seller paid closing costs. You can really negotiate a lot of times, especially if they absolutely need this. Tell the sellers up front, my clients absolutely need this to make this loan go. Then it's a no-brainer. Like, hey, when they're talking to their clients about negotiations, hey, they won't be able to get a loan if they can't get these closing costs. And so if you do that up front, that is a good way to help them get these costs covered, which also makes them feel less stressed out when they go through closing and they see all these fees. I'm paying for this, and that. Like, no, we got it covered for you. A lot of times you can, especially in the current market, you should be getting the sellers to cover your closing costs in most cases.
And fair warning, again, keeping your loan officers close. Different amounts of closing costs are allowed on different loans. At the time of this recording, for example, you're like, oh, don't worry, we'll get you 3% in closing costs on that investment property. Nope, you can't do that. And it can go as 6% on other properties.
See, and that's a great point. And different types of loans, like even like the VA loan, I've been told so many times from LOs, like, oh, you got money left on the table, you can't use that. Well, you could use it for permanent, rate buy downs instead of like a 2-1. And so there's different caps. So yes, guys, you make sure you're working with a good LO who's knowledgeable. Reach out to Brian. They got, I don't know, roughly 60 LOs to choose from. You reach out to me. I've used a lot of different LOs. I can give you some direction of ones that I know, hey, they're vetted, they're knowledgeable, they answer their phone. They'll, when they're kind of on the hook and they're like, I need to keep you as an agent, they're going to do a really good job. And so we vetted quite a few of those LOs. We're going to lender credits. We don't need to talk much about that, but basic qualifying terms, debt to income ratio, DTI, guys, you're going to hear about this. This is how much they make versus how much their debts are. And so they want to look at your acceptable credit and legal statuses. Do you need reserves in your accounts? These are all things that they're going to be looking at. But again, if there's an issue and they're not getting qualified, there's a lot of options and opportunities. But let's start with credit scores, Brian. Again, in the training I did yesterday, everyone said, oh, the lowest you can go is 620. All the agents thought, no, you can't do a loan below 620, which I thought was really funny. I got some stats here, but there's overlays, right, Brian? So some lenders will allow higher or lower interest rates, but they will still charge a higher interest rate with the lower credit score. But things here, like they didn't know you could get as low as 500 in some cases with VA loans. Now, those aren't going to be the best terms, but the VA doesn't set a requirement. FHA, usually it's a 580 or higher. Then you have 620 for your conventional loans, but those can change, right, Brian?
Yeah. So you've heard the phrase 97% of stats are made up. I'll just preface what I'm about to say with that. So yeah. I'd venture to say probably like 20 to 30% of people who think they can't qualify can. And the two things are down payment and credit score. Yeah. They've been told by their parents, make sure you have 20% down, because their parents want them to avoid mortgage insurance, but you can do it with 0 down. Yeah. Same thing with credit score. Their bank might tell them 620. Oh, shucks. Well, I guess I can't buy a house for the next 3 years because my credit's so bad. We can go down to 500. Not everybody can. A lot of places can. Most brokers can. And I love what you put here. Credit can be improved quickly. Let's say somebody's at like a 470. We have this thing called a credit simulator. So we take their application, we run it through, and it shows all their debts. And it says, guess what? If they pay 200 on this card, 100 on this card, and pay off this, this judgment or lien, their credit score will jump 46 points. And it's pretty accurate. It says this is what will happen. So we can give them advice, do these 3 things. They do it. We do a rapid rescore, and it actually can bump their credit score up to above that 500. Or if they're trying to qualify for a loan that's above 580, it can bump them up to 580. But it's important to know that you can't just say, oh yeah, and this is, I can say this, I'm not being mean because I used to be a realtor and I did stuff like this. But a lot of realtors will be like, oh yeah, we can get you 3.5% down. Oh, your 510 credit score? Yeah, my lender can do that too. 3.5% and 500 credit score. Well, most 500 credit scores require 10% down. So right. Everything varies wildly, and that's why when somebody says, what are interest rates? I'm like, I need like 10 data points to tell you what an interest rate is on any specific situation. But yeah, the credit score is a huge misconception, and there's a lot you can do to improve it quickly.
Right.
I don't even remember what your question was, so hopefully I answered it a little bit there.
I didn't give a question, so you're good. Yeah, you did great. All right, so citizenship status. So this one is another one. We're talking about legal citizenship. If someone is not a citizen, they can still buy a home. Now, depending on their status, will depend on the type of loan that they can get. If you got your green card, you're a permanent resident alien, meaning you have the reason to be here permanently, illegally. There's non-permanent resident alien, may have an eligible visa, and so it might be like a short-term work permit. There's different items there. But if someone is here illegally, means they passed their visa or they didn't get a visa when they came over, they can actually get an I-10 loan. And this is what people don't understand is that the government just wants to make sure, are you paying your taxes, essentially? So if you don't have a social security number, you can actually pay your taxes through an I-10. And so I've been told so many times, like, oh, you can't get a loan because you're a foreigner. I'm like, no, there's certain ways. But you want to make sure, again, I've seen a lot of mortgage fraud in this arena. people will pretend to be citizens, or the LO will say, we can get you better rate doing this. And then they're misguiding. I actually spoke to someone, I'm not going to say who, but they were from one of the Latin American countries. And he said, hey, I think there's something wrong with my mortgage. I was looking back at stuff, and I think he did stuff illegally. And so we went through a bunch of stuff, and the LO made it look like as if he was a citizen, and he wasn't. And so he's like, well, what do I do? And I was like, well, it's done now, but make sure that you are verifying what's going on. Just like there are some realtors who are unethical, or well, let me actually rephrase that. There are real estate agents who can be unethical, and there can be lending officers who are unethical. Your job is to protect your clients at all costs. I don't know if there's anything else you want to add to this.
Yeah, I actually have a personal friend who went to jail for like 4 or 5 years for this exact thing. He had a wife and kids. It was really sad. So that kind of their family stayed together, luckily, but it wrecked their lives essentially. And he was putting together fake citizenship documents. He was forging all sorts of stuff. And I-10 is already generous enough. Like the fact that we allow people to buy homes that are essentially illegally here, they're paying taxes. I-10 stands for Individual Taxpayer Identification Number. So it's like they're contributing to America. So America's like, hey, we'll get you a loan, we'll get you into a house, right? So that's already generous enough. If you're trying to get anywhere near forging documents, or you even get a hint of a smell of somebody forging documents, run away from that situation as fast as you possibly can.
Absolutely. All right, debt to income ratio. Basically, give us kind of some guidelines on what that percentage is. Where generally do they like to see that debt to income ratio be at?
Yeah, it depends on the type of loan. 50% is generally the danger zone. VA, as you know, Josh, there's a lot of exceptions with VA, so throw out the rule book with that. But 43% will really get you into some wider variety of loans. But if your DTI is higher than 50%, you're getting into some really niche products that are going to be hard to deal with.
And guys, think about this too: is you got a client coming in, and if their mortgage is $2,000 and their income is $4,000 total, and they've got a couple car payments, and they need to pay for their groceries, it's all gone. I mean,
it's irresponsible. That's the real reason for it. Anything above 50, there's no way somebody can reasonably repay that.
Yeah, do not put your own commission above someone's well-being. So, all right, self-employed. Now, being self-employed, generally, how much time frame do you need to show for QM loans to be able to qualify?
For self-employed, it's generally 2 years. We can get you a 1-year waiver here. Most places it will be 2 years. And I wish more realtors did videos. Like, yeah, how nice would it be if all the realtors out there got on and said, hey, if you're going to ever buy a house, Mr. and Mrs. Self-employed people out there, make sure you don't write off everything. Like we do have some programs where we can reach in and be like, okay, that was a write-off, but it was income. There's actually some really cool lenders we have that will recognize that. But in general, if you're self-employed, just try to make a little money, like show something.
I had a client, and he was probably like 180, 200K, it's somewhere around that. I can't remember exactly. And he made 30,000 according to taxes. And so he's like, oh, I can't qualify.
It's one of those things that's like plan ahead, right? Like,
yeah.
And obviously you made a nice list here of things that we can do, but we can't do those for everyone. Not everyone has assets to do it. Not everyone can do a bank statement loan because they might have had a few bad months in the last few months, and the lender will be like, yeah, we would give you a bank statement loan, but why did you bring in 50,000 here and 0 there? Like, this seems wildly crazy. So educate everybody who's self-employed early on, way before they're going to go buy a house. Just say, oh, I heard you start a business, and this is a great way to add value. Say, just so you know, I like to warn all my friends, because I am in the industry, you should probably report some income, like maybe even talk to my LO, even if you're a few years out. Like let's make sure we can get you set up when you're ready to go.
That's great. All right, so agents, so when you are dealing with a new contract, it is important that you give a few minutes to talk with the LO and ensure, hey, who's going to be on this loan? So on the contract, you need to have who's going to be on the loan. And so, for example, if you have John Smith is on the loan and he's on the contract, but later on the LO says, hey, we're going to need to count the spouse's income. Now you need to add her to the contract, which you can do. You just go and do an addendum and send it over to the sellers. But the seller has to agree to that. Now, the Rep C, the real estate purchase contract, by its nature, is set up to be non-transferable, meaning you can't just sell your option for the purchase unless you put that in an addendum. So be very careful. I would get both of them on there and ensure that, okay, who's going to be on this contract, who's going to be on that, to be very careful so you don't run into a situation where someone, and this has happened lots of times, the seller gets another offer as a backup and they're like, I've got a better offer now, and here's my way out of this by not signing this. People will do that, and it can happen. So protect your clients and make sure, hey, we need to know who, because this can come into play. Just a quick oversight there. So overcoming affordability. If someone's struggling to qualify, Brian, I know that we already talked about credit, but there's a few things we can do. Like if they have a high monthly debt, but it's almost paid off, is that worthwhile for them to pay off that credit?
Yeah, and that kind of goes back to that credit simulator, but this would be more of a qualifying type simulation, which we would do and say, hey, you're just a few $100s a month from qualifying. Can you maybe sell that car? Like, do you need 3 vehicles right now, or could you get rid of that payment right now? There's
Absolutely.
That's probably there's 2 big flaws with success in real estate. One is not being creative at all. That will lose you a lot of opportunity as an agent. One is being overly creative. That will lose you your license. So get a little creative with your clients. If they're like, oh man, we don't qualify, maybe we'll try again next year. Dig a little deeper. Be like, well, why did they say you don't qualify? Let's look at that. Do you need any car? Like, could you feasibly, you work 10 minutes away, could you Uber to your parents' house once a month for dinner? Like, there's ways to get creative, and don't want to go into any gray area, but after the transaction's done, people can go and buy furniture and do whatever they want. We all know that, right? But as far as getting qualified, there's ways to pay off debt and try to get in a good position.
Yeah. So that's going to take us to getting qualified, right? Now, when you're presenting an offer, usually you want a pre-qualification or pre-approval. Give us a quick breakdown, the difference between a pre-qual letter and a pre-approval.
So pre-approval, I like what you wrote here, actually. It's perfect. Conditional commitment from the lender. In reality, I wouldn't trust either, honestly, depending on who you're working with, of course. But as we know, what could you do right now on like rocketmortgage.com? What kind of approval could you get in about 30 seconds, Josh?
I can put whatever I want into anything online and get something.
Yeah, and you can be like, oh, look, I'm pre-qualified, right? So that's the trick. I even get letters in the mail saying you're pre-qualified. Like, it really doesn't take a lot to pre-qualify. But if you can get pre-approved and at least get the documentation, and as a listing agent, this is important, because if you get a pre-qualification or pre-approval, those are 2 very different documents. So familiarize yourself with them. We're really running short on time. So again, talk to your loan officer and have them go into depth about it.
Basic thing I say is, agents, like when I see a pre-qualification, I'm thinking, okay, they talked with a lender and gave verbal stuff. Pre-approval is like they showed some documents, but it does not mean that they're underwritten approval and they have clear to close. That's way different. So, all right, we're going to go into...
There are some places that have that. Like if you see a letter from a lender that says, hey, we've actually put this through preliminary underwriting, that's like Wow, that's great.
That's, yeah, if you get something like that, then you know they're in good standing. We're not going to go over all the deadlines. We do that in another class, but here's 2 ones we wanted to talk about. Due diligence deadline. If you're ordering appraisal, make sure that when you're talking with your LOs that you're saying, let me know once you've ordered it. I've gotten a lot of feedback like VA loans take forever, FHA loans take forever to do their appraisal. It's actually does not take longer. Was it ordered on time? And so I've seen LOs blame the appraisal, and I've closed VA loans in 10 days. Like I've had short closings with VA loans. There is a 10-day requirement for like VA, for example, for the appraiser to get out there. And so when I realized, hey, we're past our 10-day deadline, and I reached out to one of the LOs who was doing the deal, wasn't one I suggested, and he's like,
somebody said,
well, yeah, oh, the LO or the appraiser, they just took too long to get out there. And I realized, well, when we're past the 10-day period when you said that it was taken care of. And he's like, well, maybe there was some miscommunication, trying to get out of it, but you have clear. Now, the financing and appraisal deadline is a really important one. Agents, if you pass this deadline and you don't have a CTC or clear to close, your earnest money will be lost. Most LOs are not familiar with the repercussions of losing earnest money, and they think you can just magically get an extension. You need to make sure your LO is knowledgeable and tell them, I need to know that we have clear to close by a financing deadline. And you say, if we don't, I will need to cancel this listing so we don't lose earnest money, or I have to try and negotiate, but that's not a guarantee. I would really put the onus and the urgency on the LO so that they're not waiting to get things going for this process. We do need to go a little bit faster on a few things, but timeline expectations, pre-qual and pre-approval, usually how long does that take for your LOs to be able to grab those?
I mean, pre-qualification is almost instant, like we talked about. Pre-approval, a couple of days.
Okay. Underwriting, usually what's that time frame once you're into underwriting?
It can be 1 to 2 days, depending on the lender. Going back to it, make sure your loan officer has used that specific program, because I've seen it stretch in a really busy market 5 to 10 days. Like you really need to understand what's going on.
Now, generally loans will close in roughly 30 days. That's pretty standard practice. Some of them might take a little bit longer, but when you're talking about the CD, this one gets a little bit complicated. It's supposed to be 3 business days after receipt, right? But how do we count those business days, or how do the lending institutions count those?
However they feel like at the moment.
Right. And so I heard we count
weekends. I don't
count
know.
tonight. We'll count Saturdays sometimes. I had some people count Saturdays. It's
if you want to be safe, assume it's business days, no holidays. Like if you want to be safe, that's how you should look at it.
So have clear communication. Don't put your closing right up against it, and then they're like, no, we can't do that. So ordering appraisal, when you're talking with your
and I know we're so late, but this is so important. Make sure you verify with your lender that they got that signed, because the deadline he's talking about, the TRID deadline for 3 days, the lender's like, yeah, we're going to be ready to go, but they never got it signed. That 3 days is non-negotiable. That's regulation. Nobody can do anything about it. It's federal. So you might lose earnest money, you might lose the house. So just say, is it signed? Do you have the signed copy? So you as an agent, again, you're doing everybody's job. Okay, from 3 days we can close. All right, go ahead. Sorry.
No, you're great. Okay, ordering appraisal. When you order we talked about the deadline. When you are checking up on the appraisal, my suggestion is that you do a 3-way text message or email chain to you, the LO, and the buyer, and saying, hey, we are good to order the appraisal. Have you ordered that yet? And you need to not just say, hey, where are we at with the appraisal? Oh, we're good. What does that mean? What does good mean? That's a very generalized term. I've heard that so many times. Oh, we got it taken care of. That's not the same as it's been ordered. You need to make sure that it's in process, because sometimes they delay and don't get it done, and then it doesn't happen in timely. So some pitfalls. Now, what are some things that can cause a hiccup in the transaction last minute?
You're asking me, right? I'm just having too much fun watching this funny little cartoon you put on here. Well, I mean, you've probably heard these before. This is such an important conversation with your client that I recommend you have it 2 or 3 times. I, as a loan officer, will have it 2 or 3 times. You, as an agent, have it 2 or 3 times, and warn them they'll get sick of hearing it. But you can't change jobs willy-nilly. You can't quit. You can't go get furniture for the house. I know you would want to. Don't close credit cards. Don't open new credit cards. Like, there's, low appraisal stuff like that's obvious, but just tell your client from the beginning, and I would recommend putting a list together with your lender. Hey, let's share this list with our clients, and we're each going to promise to remind them to review the list a couple of times each transaction.
So, agents, you have to warn your clients. Even when you do warn them, just like Brian said, multiple occasions is necessary. I remember telling them, don't get a car loan. And I had a few instances where they got a new car. Hey, we just really needed to get this car. Like, no, you really needed to wait till after you got the loan. And that messed up the situation. Paying down credits is great, depending on how much money you need. I mean, you want to talk to your lender before doing anything, but closing an account could be detrimental, and it could hurt your credit score and your interest rate, which then could affect your affordability. Assets too, getting rid of assets that were being used. And here's one I thought was funny. I didn't change careers. I just went self-employed. And I was just like, no.
You just lost your guaranteed income.
and he's like, no, I can make it happen. I'll just write a letter explaining. I'm like, no, that's not how it works. He didn't get his loan. And I'm sharing you guys things that I've gone through. Even when I've explained these details, people are like, oh, no, I can explain it out. You need to remind multiple times and say, before you make any changes with employment, with credit, with purchases, talk to me first, because you will lose your loan. Scare them. They need to be scared. Then they will actually talk to you. So
scare your clients. You need to get GIF for that. How to scare your clients.
Yeah, we're gonna do that. Okay, gifts and credits. We talked a little bit about that already. We don't go into that anymore, but RESPA compliance and marketing with an LO. So this is where I really want you to come in, Brian. Tell me about a few things that you've done that have really, been kind of creative, that have helped your agents that you've partnered with.
Yeah, and this is a big RESPA one too. We did this thing. It's a mega open house, and it's interesting. It's already won those agents 2 more deals from people that saw it happen on social media. But we hired BYU football players to come and sign autographs. We worked with the NIL. We had bouncy houses, cotton candy machines, all sorts of crazy stuff going on, prizes. The important thing to know is it comes down to marketing usually. Mm-hmm. Like, if you as an agent are like, yeah, I gave away a TV, does the loan officer have to pay half of that? It can be iffy, right? Because you're your own team as a realtor. You're your own person. You're 1099. But if there's marketing involved, that's where you really need to look at the X's and O's and split the cost. And they're kind of interesting. They talk about ad space. If the loan officer's picture is really little in the corner and yours is big and prominent, and you're like, hey, I want 50% of this, that's a violation. You have to pay exactly to the percentage of marketing space that you have.
Yeah. So marketing that's key. So same thing, like if you're doing like online, lead referrals, like Zillow, realtor.com, like different things, guys, where you can partner with an LO to get these things, but you do need to make sure that you are splitting the cost appropriately. Same thing with office space. I've seen this too. Hey, LO, I want you to, I'm going to give you all of our deals, wink, wink. I want you to spend $3,000 for this one office space in our location, when market value would be like 300. That would be RESPA, laws that you're breaking. So be very careful. And again, you cannot steer your clients. You can have, you can give them direction, but hey, this is who we want to work with as like your team, like your agents. You can do that stuff. Like, this is who we utilize. But you as an individual agent cannot steer your client to say you have to use this person or this. You say, hey, this is who I really feel comfortable with, whether it's title or lending or home warranties. Say, I know these guys, I work with them, but it's in your best interest to do some due diligence, research a little bit. But I know that my experience has been great with this one, so take that into consideration. But those are very important things. So I've done some things to talk about open houses. Guys, work with an LO who's willing to market with you. I did an open house too with a property. We did a petting zoo because it kind of like had like a farmstead feel. And so we brought a petting zoo and everyone came out and dude, it was amazing. Like kids were loving it. They had the little bunnies and they're just petting the soft bunnies and like kids are just smiling. It sets a tone, not just with those prospective buyers, but also your sellers like, oh my gosh, they went above and beyond. And then they're going to refer you to other people. From this one specifically, I got another one. And then we did a crazy open house there. And then I got another one that they referred me. And so you can gain clients from that, but also buyers. Buyers come and take a look at it and they're like, you know what, this isn't the house for me. But you can now take a look at other houses. It's a great way to market together. Another thing too, I'll show you. I've got a sign writer right here. And so people can scan the QR code or do this text for more details. But I have also done it with LOs. So I can have a sign writer below my sign writer, you know, get an estimate on the monthly payment for this property. And so now you've got an LO getting, you know, feedback and everything else. There's a lot of ways that you can market with an LO, and even just sharing on social media, commenting on social media, being at the open house. Now, the one thing I'd be careful with is that they're not acting as an agent, and that they're clearly specifying, hey, I am a lender. I'm not, you know, associated with the sell this property or anything like that. If they start saying, oh, I think you can negotiate this, now you're getting into trouble, you know, acting as an agent. So a few of those things. Why work with a trusted LO? Like what are some of the major benefits of knowing who you're working with, Brian?
A lot of it's consistency. If you work with a loan officer and something goes wrong and you switch to the next one, something goes wrong, you switch to the next one, you really lose the opportunity to create a great system between you and the loan officer. So finding someone who's ethical, who you align with, maybe have some common interests is great, because you can, you know, maybe you play basketball in the morning and then afterwards you do a rundown of the files, right? You're like, hey, let's chat really quick before we go and get ready for the day. And, you know, you create a great relationship. But when something goes wrong, you know, don't be a jerk about it, but just say, hey, I can't have this happen again. And we have a great partnership. I want to keep using you because of X, Y, and Z. We do our events together. But you can kind of help mold each other's process to be better and to fit together. If you switch loan officers all the time, you're asking for surprises, which are a nightmare.
Yeah, I like to have a couple on hand that I work with, and sometimes there's like if you have like a specific niche, like maybe you need a Spanish speaker, right? Or like I work with a veteran group, and sometimes it's really good to have someone who's a veteran and understands like the jargon. But it is important to have someone who understands your systems and personality, that you can mesh well with each other. I'll give you guys a horror story. It's Christmas time. I'm down in St. George, finally taking a break to spend time with my family, which I don't always get. And this loan is supposed to close. And I'm like, hey, so-and-so, our deadline's coming up. Where are we at? And he says, we're good. I'm like, okay, so we have CTC. Crickets.
Is that the lender version of trust me, bro?
Yeah. And I'm like, I call, because it's like we're getting real close before it's Christmas time frame, and I know everyone's going to be leaving. This is going to be a disaster. They are selling their property. There's a lot of pieces. Wouldn't answer my phone. Hey, I need you to call me. Nothing. I follow up. And this is over like a couple of days. Hey, and then he sends me a text. Don't worry, I'm getting into it. What does that mean? Like, I cannot look out for my client's best interest if I don't know what the potential hiccups are. And so we're right up against the deadline. And I told my clients, hey, look, it is 3 o'clock. And this guy, I'm sorry, but this guy, and I actually referred this person to them. And I was like, I am so sorry. He is not being responsive and not telling me what's going on. And like, I don't trust him at this point. And so I will not be able to work with this person ever again. And because your earnest money is on the line here and I don't have any details, we need to cancel. But I will reach out to the listing agent and explained to him the situation. I did. I talked with him. I was like, hey, look, everything on the table. We want to move forward. We're not doing anything else. Our lender is ghosting us and not giving us any feedback. We'll make this thing happen. He's like, you know what? You were honest and upfront with me. You know, I trust you. Thank you for just being, you know, full disclosure. And he's like, we'll do an extension here. No worries. And so we extended the financing for a few days, and the LO was like, hey, great news. Guess what? You know, and we were like still close to like the new deadline. Hey, guess what? We're able to get this happen. Go team. And I was like, yes, we got it done. I was like, I cannot do this again. I was like, you have to communicate with me. I don't care what the problem is. I need to know so I can fix the problem. I can communicate with people. So agents, you should have someone who will respect you, who will be responsive, and it's not going to just blame someone else, point fingers. You have to know what's going on in that transaction. So it's super important. Stay RESPA compliant. Again, that takes us to end of our training for today, guys. Thank you, Brian, for coming on and talking about first-rate home loans and the LOs that you guys have. If you guys are looking for an LO, reach out to me, reach out to Brian. We can give you some of our suggestions, people who might work with your personality and maybe some of your niches. But leverage your LOs to help you keep your LOs close. They really need to be super close to you. Knowledge is not everything. You need to be able to trust the LOs. And so thanks for joining us.
Word really quick.
Yeah, go ahead.
Expect more out of your loan officers. If you have a loan officer who's not performing, not communicating, your story I wasn't planning on this, but if you have somebody who won't respond to you, they're not contributing to helping you generate more business, just to know there's loan officers out there that will. Like, don't think, oh, because this guy took me to lunch and he's my buddy or we grew up together, I got to keep using him. This is your business, your livelihood, your customer's livelihood. You need to expect a lot out of your loan officer and search until you find the one that meets your criteria and your expectations.
Right. And some people will go door knocking with you. They'll come to events. If they're not willing to do any of that stuff to help build your business, you need to find someone who will help you. You need a teammate. So, all right. Well, thanks, Brian. And guys, again, this was how to leverage using your LOs and keeping them really close to you. So thanks for joining and tuning in today. And thanks again, Brian.
Yep. Thank you.